Wall Street closes higher for the fourth consecutive session ahead of key inflation data for the month of September, due to be released later today. Stocks in the Asia Pacific also trade higher, while the GIFT Nifty is indicating a mildly positive start for the Indian market. Oil corrects. Brent crude dips to a little over $85 a barrel as Saudi Arabia pledges to stabilize the oil markets in case of disruption due to the conflict in West Asia. A CNBC TV 18 poll sees CPI inflation for September coming in at 5.5% versus 6.83% in August, with food inflation expected to have eased to 6.6% versus 9.94% the prior month. IIP for the month of August is seen growing strongly at a pace of 9.5% compared to 5.7% in July. TCS dollar revenue growth shrinks for the first time in more than 3 years, even as margin beats estimates for the second quarter. Deal wins remained robust at more than $11 billion. Company sticks to its guns in doing away with the work-from-home policy, urges all employees to return to office. And of course, big tech earnings take center stage today. IT giants Infosys and HCL Tech will report their second quarter numbers. Guidance on revenue and commentary on the demand environment will be keenly watched. Hello and welcome. Good morning. In the Mumbai News Center, I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. While we are tracking global cues, our own cues in terms of big earnings is something we'll be tracking closely. But first up, as always, let's take a look at what the Asian markets are doing. They're actually higher after a strong handover that we got from the Wall Street. So the Hang Seng is sitting with gains of 1.8%. The Taiwanese index is higher by 0.3%. Across the board, be it Kospi, which is up 1%, there's Shanghai, which is up 0.75%. We are seeing some green on the Asian screen. And of course, the big inflation data in the US is something that all the markets are watching out for. The GIFT Nifty, that'll come up for you on the screen because that one is indicating an implied open in the green, a 20-point uptick. Okay, it's flat now, so the implied open is flat. Earlier, it was indicating that it could be in the green, but right now it's absolutely flat with some negative bias as we speak. So that's about the Asian markets, but let's talk about the U.S. markets. Wall Street ended Wednesday's trading session higher, gaining for the fourth straight day with the Dow Jones up 65 points, the S&P gaining 18 points, and the tech-heavy Nasdaq Composite closing 96 points higher. Moving on, the latest Fed minutes suggest rates will stay elevated until the FOMC is convinced that inflation is heading back to the central bank's 2% target. Officials, meanwhile, were divided on any additional rate increase. Through the minutes indicated that one more hike is likely. CNBC's Steve Leisman breaks down the highlights from the Fed minutes for us.
Federal Reserve officials in the September meeting judged that one more increase at a future meeting was likely appropriate. A majority pointed to upside inflation risk. For the record, this was back in September. We don't know if this still holds now. Some at the time, however, judged that no further increase was warranted. So there's your split on the committee that we're kind of hearing in the rhetoric out there from Fed officials. All agreed it was critical for policy to be, quote, sufficiently restrictive. That's the term that Chair Powell has used to indicate when the Fed would be done. And all agreed that once they got there, it should remain restrictive for some time. Several saw policy at or near the peak. Near means maybe one more hike. At means we're there already. Several all agreed that the committee was in a position to proceed carefully. We've heard that from several Fed officials since the meeting. Several say the balance sheet reduction can continue even when the Fed is cutting rates. Participants say risk from over or undershooting on rates was now more two-sided than it had been in the past. Various participants pointed to downside economic risks. They included credit tightening from the banks, overseas growth slowing down, lagged effects of monetary policy as well. Many noted that finances of some households were coming under pressure amid high inflation and declining savings. There was concern about the commercial real estate sector, concern about the availability of childcare, which is believed to have brought a lot of people into the workforce, the availability of childcare. Auto worker strike was also on their mind as a new source of uncertainty. Upside risk to inflation, downside risk to economic activity, potentially from the auto worker strike. Participants hoped that new data would clarify the disinflation process in front of them. And one more thing here, the period of below, they still continue to repeat that they're going to need a period of below trend growth and labor market softening in order to bring supply and demand into balance.
Okay, that's the update from September Fed minutes. But moving on to the next big Q, wholesale prices in the US rose 0.5% in the month of September, higher than the estimated 0.3% rise. This is slower than the 0.7% rise in producer prices last month. Investors will also be tracking the September CPI print due later today. Let's listen into what Mark Zandi of Moody's Analytics has to say on the inflation trajectory.
I think it's well on its way. I think, in fact, the most recent inflation data say they're there. I mean, if you look at the 3-month annualized growth in core consumer price inflation or core consumer expenditure deflator, the measure they target, we're there. We're 2.5%. So that's very consistent with their target. And that probably overstates the case, but it makes a strong case that we're definitively moving in the right direction here. And I think policy is sufficiently tight. I don't think they need another rate hike.
Okay, all right, that's the global market action. But how will these overnight cues impact our own markets? We have a research team joining in to do just that. What's the trade setup looking like? The stocks that are likely to be in the news and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. Yes, there are global cues, but we do have a lot of domestic cues as well today.
Hi, morning. Well, yesterday we did see follow-on buying taking place for the markets, so that was definitely positive. We had the markets which closed at 3-week highs, and it seems as though the markets are focusing on the possibility of factors such as the Fed holding off in terms of further rate hikes. Overall, Indian equities seem to be aided by CLSA upgrading India to overweight, which took place yesterday. Record funds in terms of SIPs for the month of September, which came in at around 16,420 crores, and the intensity of FII selling reducing. So FIIs, for example, net sold around 422 odd crores in yesterday's trading session. In terms of the global markets, the Brent crude prices have softened a little bit. We have US, which closed higher, Asia, which is largely higher, and the GIFT Nifty, which is indicating a little bit of a flat start for us. In terms of cues, it's definitely going to be TCS and the disappointment that it reported. Infosys, HCL Tech, HDFC, AMC will be reporting numbers today. India CPI numbers are due today this evening. It's estimated to come in at 5.5%. So there is a softening which is expected, and August CPI IIP is expected to see an uptick. But the big cue globally will definitely be the US CPI data, which we will react to tomorrow.
Okay, all right. So mix of global and domestic cues that we'll be tracking. Thank you, Ekta, for bringing us up to speed with all those cues. But Surbhi is joining us now. Surbhi, you have a long list today, a lot of earnings, a lot of stocks in news.
That's right. So earnings season has officially begun. First one is TCS. It was a mixed quarter. Revenue was a miss, but margins was a beat. Dollar revenue declines for the first time since Q1 FY21. The margins improved 110 basis points sequentially. The company also announced the buyback of 17,000 crores at 4,150 rupees per share. For Delta Corp, it was a flat quarter. Revenues and EBITDA was flat on a year-on-year basis, but PAT was up by nearly 2% on a year-on-year basis. Patanjali came up with the Q2 business updates. Edible oil segment faced an ongoing pricing pressure, the company said, and there were excessive imports which led to elevated inventory levels, impacting both revenue and margins in Q2. Sula Vineyards came up with the Q2 business updates. The Q2 revenue was up 11% on a year-on-year basis, and elite and premium brands were up 18% on a year-on-year basis. Aurobindo Pharma, the company has signed a letter of intent with an American company, and this is for contract manufacturing operations. Cipla, the US FDA, issues an EIR with a voluntary action status for Invagen Pharma, the wholly owned subsidiary of Cipla, which is in New York. And as Ekta mentioned, we'll be watching out for Infosys, HCL Tech, HDFC AMC, and Angel One, as they'll be coming up with their Q2 results today.
Okay, all right. Thank you so much, Surbhi, for all that list. But let's talk about all the cues from the F&O space. Manglam is joining us now. Hey, Manglam.
Good morning. So yesterday was a very good day of trade in our markets itself. The Nifty not only closed above that 19,800 mark, which was closer to the higher end of yesterday's trading range, it also conquered the 20-day moving average of 19,760. This a day after it conquered the 50-day moving average. Importantly, it was led by the two heaviest weights on the index. We had strong contribution coming in from Reliance and HDFC Bank, and that despite the underperformance that we saw in the Nifty Bank itself, these two contributed. The cash market flows were positive as well. The DIS bought about 1,000 odd crores. The FIS selling reduced to just around 400 odd crores. And not just that, with the market moving higher, a lot of short positions in index futures were covered by the FIIs. They bought about 1,120 crores in index futures and covered almost 10,000 short contracts, adding 2,000 long contracts as well. and as a result of which their long exposure inched mildly higher from 26-27% to 29%. Mind you, sustained outperformance on the upside will lead to those 71% short positions covering their positions as well, and as a result of which we could perhaps cross that 20,000 mark and maybe look at fresh all-time highs on the Nifty as well in this series. Nifty weekly options expiry today, and ahead of that we've seen a lot of writing at the 19,900 call, telling you that 19,950 would be the first leg of congestion, but were we to cross that, then 20,000 opens up because there has been some punt buying out there as well. The one thing that is sure is strong support at the lower levels. 19,800 put added almost a crore shares in open interest. In fact, between 19,700, 19,750 and 19,800, we've added 2 crore shares in open interest itself. Watch out for some bit of resistance on the Nifty bank at higher levels. The 20-day moving average is 44,841 and the 50-day moving average at 44,673. So that is some congestion we'll have to eye. And a couple of stocks we'll watch out for. Delta Corp post its numbers yesterday out of F&O ban, and MCX as well goes live on the new trading platform out of F&O ban.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, IT Bellwether TCS reported the second quarter earnings last evening. We'll get you more details and analysis on the other side. Welcome back. Well, of course, the big cue to watch out for today is the earnings coming in from TCS, which reported a mixed set of numbers for its second quarter. Dollar revenue fell short of expectations, but margin beat estimates. Rima is here with the earnings analysis. Rima, what is your take?
So it's a mixed bag from TCS this time. The positives in the number are, one, margins have come in ahead of what the street was anticipating, expanding by 100 basis points to 24.3%, a beat. Two, the deal wins have come in ahead of expectation, $11.2 billion, ahead of the management's guidance of $7 to $9 billion. And this is the second highest deal win reported by the company on record. And remember, in the quarter gone by, we also had that large JLR deal win. And the third one is attrition has eased meaningfully, down to 90 basis points on a quarter-on-quarter basis to 14.9%. So these are the positives in the numbers. The negatives in the numbers are the top line. Now, revenues for the company have contracted. The dollar revenues have fallen by 0.2% on a quarter-on-quarter basis versus estimates of a growth. The street was anticipating a bit of a growth, about 0.7, 0.8%. So that is a bit of a miss. The second miss is the fact that the headcount has fallen meaningfully by more than 6,000 employees on a quarter-on-quarter basis. And even your headcount, your employee, is seen as a lead indicator for the demand outlook. And the third one is BFSI, Telecom, High-Tech. These three verticals continue to see some pain. The company has also announced a buyback. It's a 17,000 crore buyback, so lower than the size that they had announced last year, which was 18,000 crore. It's a tender buyback. 17,000 crore is the size at a price of 4,150. So a bit of a mixed bag from TCS as we kickstart the Q2 IT earnings season.
Okay, mixed bag, but staying with TCS's earnings, let's also listen into what K. Krithivasan, CEO and MD of TCS, had to say during the presser. Here are the commentary on new deals and growth plans.
We have signed a lot of new deals. They have different tenures, and there is a revenue pattern, already defined. It's obvious, right? Like if the existing projects get paused or optimized more than the incoming revenue, you will have. So that's that's what you see here. But what we believe, once things settle down, once there is a certainty, we believe that the reduction or optimization will be overcompensated by the new projects, and we should get back into growth.
Okay, that is the word coming in from the CEO and MD of the company, but also listening to TCS's Chief Operating Officer and Ganapathy Subramaniam talking about the factors that led to the revenue decline.
There is an element of uncertainty due to the geopolitical situation as well as the macroeconomic uncertainties and election years. A number of factors are playing into that muted revenue growth. But we are happy with the quarter because, we could deliver about 110 basis points of margin improvement, and our order book has been pretty broad-based and quite strong.
In fact, we'll be speaking to TCS's CEO and COO at 8:25 a.m. while the CFO and CHRO will be joining in at 8:45 a.m. today. So stay tuned for that conversation. Okay, time for another break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. Well, Israel continues to bombard Gaza, stepping up its offensive after a surprise attack by Hamas last week. At least 1,000 people on both sides of the border have been killed in less than 5 days, while more than 2.5 lakh Palestinians have fled their homes. Meanwhile, Israel formed a wartime cabinet last evening, a day after promising a ground invasion of Gaza. NBC News' Josh Ledman gets us the latest from Tel Aviv.
Part of the Israeli response has been continued airstrikes in the Gaza Strip, dozens of sites hit by Israeli forces, and we've seen continued skirmishes across the border between Israel and the Gaza Strip, with Hamas continuing to send rockets toward Israel. From here in Tel Aviv, we could hear the booms today of some of the Israeli Iron Dome missile defense systems working to try to knock down some of those Hamas rockets. But in the meantime, the Gaza Strip today was plunged into darkness when the one power generation facility, the one power plant in the Gaza Strip, ran out of fuel. Of course, that power plant is entirely reliant on Israel for its fuel supplies, and with fuel now gone, most of the Gaza Strip is completely dark except for a few locations that have generator backups. But even the hospitals say they now only have a couple of days left of fuel before they too will be without power. You mentioned the Israeli government forming a new wartime cabinet. This is essentially Prime Minister Netanyahu and one of his chief political rivals, Benny Gantz, putting aside their deep differences and saying they're going to come together for the good of the country and its national defense right now, trying to send a clear signal to Hamas that this country will stand united, as the defense minister here said that their intention in this upcoming operation that we expect to involve a ground incursion will be to wipe Hamas off the face of the map.
And the Indian government has announced the launch of Operation Ajay to repatriate citizens from Israel and Palestine. The operation is all set to begin today. Special chartered flights have been arranged to bring citizens back home. According to reports, the Indian embassy at Tel Aviv has already emailed the first lot of registered Indian citizens for today's special flight. Okay, all right. With that, let's move on. And it's time to talk all about the commodity markets. Manisha Gupta is joining us with that update. Manisha.
Well, thank you for that, Sonal. I'll start with the crude oil prices because we have seen volatility continue here. Overnight, it has been a 2% decline in crude oil prices, while the Hamas and Israel conflict continues, but Iran has denied involvement in Hamas aggression to Israel, and that seems to have brought off some premium from the crude oil prices. Though Mercuria, which is the largest trading for crude center, says that oil prices still could hit $100 a barrel if the Middle East tension or situation continues to escalate. The markets also saw some decline after Saudi Arabia has pledged to help to stabilize the markets. So all in all, we saw from some profit taking, no impact on crude oil output on the ground, and that led off some profit taking into the markets. On the other side, you also are looking at gains continuing in case of metal prices. So you have gold and silver trading at a 2-week highs. Copper prices also edged higher on retreating bond yields. The dollar index also has come off its 11-month highs. That has been supportive. Markets also see FOMC minutes indicating cautious stance on rate hikes. And then we're talking about a stimulus coming in from China as well. So all in all, a strong start for the metal sector.
Strong start for the metal sector. Thank you so much, Manisha, for joining us with all those details. Before we wrap, let's quickly take a look at what the Asian markets are doing. They were higher when we started the show, and that continues to be the case as well, and that we'll be tracking closely. In fact, they have extended the gains that we were seeing, so looking good for the Asian markets. And the GIFT Nifty, that will come up for you on the screen, that was indicating a flattish start when we started, absolutely flat with some negative bias, and it continues to be that way. With that, we'll take your leave on this edition of Power Breakfast, but stay tuned. Bazaar Morning Call comes up next.